panelists. We're going to move on to our next panel discussion, which will be Bankable Projects in Hospitality in Key Markets, moderated by Daniel Trappler, Senior Director, Development, Radisson Hotel Group.
Hello. Is this on? Yeah. Okay. Good afternoon, everyone. My name is Dan from Radisson Hotel Group. Very pleased to be here as the moderator. I guess this is the start of the hospitality forum for the afternoon. I just wanted to briefly tell you who's on my panel this afternoon. In summary, we have 3 banks. One is a commercial bank for the region, which is ABSA, represented by Vumi. We then have a regional DFI, which is a development finance institution at the end with Katlego from the IDC. We have an international DFI represented by Puja, which is the IFC, the International Finance Corporation, a subsidiary of the World Bank. So we have 3 lenders, given the relevance that we'll be talking about bankable documents or bankable projects. We also then have Mr. Guido Giacetti, who is the founder and executive director of RDC Properties, with exposure in a number of different property sectors in the region. And lastly, but not least, we have Willie, depends where you are in the world, I guess. Today it's Willie. Willie is from Turner & Townsend. So just briefly, just to set the context why I'm moderating and why there is a small relationship between Radisson Hotel Group and each of the panelists today. I'll just briefly mention that brief link. Mr. Giacetti and RDC Properties are the owner of the Radisson Red Hotel in Rosebank in Johannesburg, and we have a strong partnership there. Katlego from the IDC are our owners in Radisson Blue, Port Elizabeth, as well as a few other, the senior debt provider in 1 or 2 of our other properties in the region. We have quite a kind of global relationship with the IFC and some of our projects, and mostly in West and North Africa that are relevant for today. Billy from Turner & Townsend is the project manager on our new Radisson Resort development in Victoria Falls, which is of relevance today given the topic. And Vumi from ABSA is one of the lenders in our Radisson Blue in Umhlanga. So thank you all for joining me today. We have 40 minutes. I thought that I would start with Willie and get from your perspective or from Turner & Townsend's perspective, what makes a bankable project in hospitality within the context of Africa?
Yeah, thank you, Daniel, and good afternoon, everyone. It's an honor to be here. I think, in essence, a bankable project for us is a project that demonstrates commercial viability, where cost certainty exists, and a project that is strategically aligned with what the market demands. I think some of our previous panelists made it clear, and I think everyone in the room will agree that developing projects in Africa is challenging, but I also think that there are ways to overcome that. And by truly following the right procedure and following the right steps in getting to a bankable project, I think we can really mitigate some of those issues. I think when we talk about bankability, we're talking about a couple of things. A robust feasibility study and market analysis to be done right up front. We see it quite often where this is not done, and usually the absence of feasibility study and market analysis usually comes too late and comes at a great cost. There's a lot of hospitality consultants, a lot of them here, that really dive into the market, what is currently in the market in terms of hospitality rooms, in terms of the different offerings, whether it's mid-scale, luxury, upper upscale, and really advise their clients what is the offering that's needed in that market, what would be the average day rate, and essentially working all of that back to a certain type of brand, certain type of offering size in terms of keys, the ADR, as we've previously mentioned, and all of that will then, in your feasibility study, give you a maximum construction cost for your project, which I think is so critical right at the start. On the back of that, you need a very clear concept design from recognized architects. We have a few challenges, and I think we'll come to that later, where this is not really the case, where some of our clients don't follow that. But from a recognized architectural firm, drawing up concepts that's first of all in line with what the brand requires, that's been identified, and that can then be costed to make sure that as part of this bankable document, we have what we call an order of magnitude estimate that goes with the concept and with what the market feasibility study has shown. In all projects in Africa, there's a lot of different stakeholders, but I think especially so in hospitality. More often than not, there's government involvement. You have the developer, you have finances, you have operators, you have the brand itself, and then you have a professional team. And it's very, very important that all of those are aligned right from day one. And then I think further to that is to have the right professional team and advisory panel with you from day one to take you through these steps and to make sure that you compile a concept that talks to, or a market feasibility study that gives you all of this information, a concept design that talks to that, as well as an order of magnitude estimate. And in essence, for us, that forms a bankable document that can show that your project is commercially viable, that it talks to the demand of the region that you want to develop your hotel in, as well as you have price certainty.
Thank you. Thank you. That's a very thorough response. So we appreciate that. It seems all good in theory. But it doesn't always work out. And Katlego, I wanted to ask you, you've been at the IDC for a long time. Would you agree with what Willie is saying? And what does the IDC look at when evaluating a new project? And what type of participation does the IDC get involved in the hospitality sector, please?
Thanks so much, Daniel, and good afternoon to everyone. I'm actually glad that you started with Willie, because that detail is very necessary. Yes, it is theory, but as funders, we actually take the very process that he just underlined very seriously. And I think for us, obviously, we want to also see commercial projects that are commercially viable. And projects that are commercially viable have to speak to the elements that he spoke to. First, you look at the market. What kind of product is the market demanding or is feasible for that market? And then you work it back to say, what project type, cost should I be incurring for this? And this is very important for us because I think over time what we've seen is that it has been mentioned even earlier that hotel projects are very capital intensive. They're very expensive. So currently you're looking at anything between 2 million up to 4 million cost per key, when including the brand standards that the likes of yourselves will want to have in a hotel. But on the other side, this ADR that Willie talks about hasn't moved strongly enough over the years. I think we've seen a better move since COVID, although part of it was maybe a recovery of the COVID. But even in the years prior to COVID, it was almost stagnant, especially in South Africa, maybe because government and corporate are a large consumer of the hotel product. So therein lies just an issue of affordability and economic viability, because you've got the project costs, the cost per key continue to increase while the ADR has been stagnant. So what that has looked like for us is that from a debt to equity ratio, when in the past we would have, looked at anything between even 70-30 or 65-35, it's moved it, more negatively towards more equity. So it's very important that this process is actually well analyzed, that Vili talks about. Another thing is making sure that you do include your operator in the process as he has outlined. Because we also find that a lot of projects or a lot of promoters bring the projects, they haven't engaged the operator in terms of that analysis and that input from the operator as to whether the design makes sense, the brand standards are included. And we do understand that, the operators do actually charge for that service. But what it allows us to do is to make sure that the project is fully funded. It does happen that you would get a project that is approved and it's time for implementation, execution, and then you find that only the operator comes in to say, actually, the brand standards have not been met in this design, which then, adds to the project cost itself. So we've had those instances, and I think for us, it's very important that we have all these elements that Vili is talking about, so that number one, we know that we've got a fully funded project, a fully costed project, number one. And number two, we've got a healthy debt to equity ratio that will make the project sustainable. So where we come in as the IDC is to say, given the structure at hand, how best can we help, given the instruments that we have, to make it viable? Our key or our core instrument is senior debt. We're not fans of mezzanine instruments because they are expensive, they accumulate very quickly, and they balloon. In instances where we deem a project strategic, and strategic speaks to the core objectives of the IDC being a DFI, which is job creation, which is special equity. Special equity refers to developments that are outside of the big metros, where we've got transformation in the form of black entrepreneurs, ownership, women and youth, things like that. So in those instances where, and also we look at the project in terms of what it's doing to the broader, local economy. So when we're able to take those strategic elements, we can consider an equity check. I think it's well publicized that together with ABSA and some other funders, we have the Club Med that's currently in construction, and there we've taken an equity stake because of what we've seen from a strategy potential for that project. So in those instances, we can take equity, but the main is a senior debt. And with that senior debt, we allow ourselves to be a little bit more flexible, I would believe, more than a commercial bank, so that we, play the role of being a DFI. So looking at, for example, where those objectives are well met, we look at pricing discounts. Number two is how we actually model the repayments, the moratorium, sculpting, whatever it can be that we can put on the table to best make sure that the project is sustainable. So in a nutshell, that's how we
Thank
fund.
you. Thank you, in a nutshell. Thank you very much. That's the nutshell. Okay. It sounds
go
like
on?
sorry? No, please. You've given us a lot to think about. I wanted to speak to Guido. Thank you for both of your thorough answers so far. But let's keep the conversation flowing a bit. Guido, from RDC Properties' perspective, you are landlords of a few hotels in the region, none of which are listed above. So nothing in Zanzibar, East Africa, KZN, or Victoria Falls. Please could you just outline to us slightly where you do have a presence in this sector, and what would drive you to invest into one of the sectors or one of the regions mentioned above, given your experience over the years, please?
Thank you very much. Nice to have you to be here. Our portfolio is predominantly listed in Botswana. I operate through a Swiss holding company that invests across real estate. We have approximately 600 keys. Keys means keys of hotel rooms. They represent around 8 to 9% of the revenue of our group as a whole. So hospitality is not the biggest focus of our group, but we operate hotels in David Livingstone. So yes, the other side of Vic Falls.
Okay, yeah, other side, yeah.
With David Livingstone Safari Lodge, Chobe Marina Lodge in Botswana, right. A Marriott in Gaborone, which is one of the biggest hostels in Gaborone. We have the Radisson Red you mentioned. We have a small lodge in Botswana, another one, and we have a lodge in Madagascar. So that gives you a spread of where we are looking for. We love leisure. We like leisure. So leisure is a focus of our future growth. Our portfolio, as a group, we have properties in 9 different countries. Under the listed vehicle, only 6 countries, 7 countries. So that tells you a little bit the spread of our portfolios around. What makes it, why we would, I think the key as an investor, I like the idea you call them bankable, but I think we should say that have got potential to be financed, because there are very few banks that are really supporting hospitality. So it's nice to talk about bankable project for banks, but you go to a bank and say to them, here is a project which has got all what Willie were talking about, consultants and every study, feasibilities of everywhere. It's actually quite difficult. If you don't put a lot of your money, nobody will bank it. That's the experience of ours. So I think and it talks to a number of failures, and it's what you were talking about before, of the fact that, I can give you examples. Lonro Hotels invested in Botswana with all kind of feasibilities and clearly with the standard and everything. They rented out a property of ours, and 4 years down the line, they were basically insolvent. I had to buy back the hotel for a song and operate it, because we fortunately have the skills of operating hotels. So you can have all the feasibility of the world, but if that feasibility has got a poor market analysis, and they were banking on $250 per room in Gaborone, that's not achievable. And 10 years later, 15 years later, we haven't achieved that level of bankability. So what I say, it's nice to have all the consultants of the world, but at the end of the day, it has to achieve the ADR that you're talking about. So I think that's key. The other key is tenure, land tenure and long-term tenures. Many lodges and countries are going for concessions that are short-term, 15 years concession. Now, with an investment in property that is in hospitality, that is only on a short-term 15 years lease, you can't, if you want to really invest into it, you can't make it work. It has to be long-term tenure, so that you invest in it, you invest in a concession, in creating community involvement in your projects. So I think tenure is an important element, and wherever you operate, I think that's a thing.
Yeah, and we see different types of land tenures in different parts of Southern Africa. I think in East Africa, you have these leasehold agreements with the government. In parts of Botswana, you mentioned earlier as well. In South Africa, we don't have that. We have freehold. You're able to buy the land outright in perpetuity. But just in terms of time, I'd like to focus slightly on Vumi. Thank you, guys. It's a large panel for only 40 minutes, so I acknowledge that it's difficult to all speak, and hopefully we'll eventually get to Pooja. But just before we do, I wanted to speak to Vumi from ABSA. I think that you've taken as a bank, quite a strong view on KZN. Maybe you could tell us a bit about that, please.
Yeah, thanks. Thanks, Dan, and good afternoon, everyone. So Dan, I think you're right. The spotlight has moved to KZN as far as tourism and hospitality is concerned. So you'll find that north of KZN, North Coast, what we call, it's part of the Ilembe district. There is a lot that is coming to market. So we are friends with IDC. We've become buddies from financing Radisson now to financing Club Med. So this is the first Club Med that is coming to South Africa. And it's one of the 70 Club Meds that has got both a safari and a beach experience. So it's quite an exciting project for KZN, and we have taken a lead arranger position as ABSA, where we have partnered with IDC and African Bank to finance that 2 billion project. So I think
2 billion?
Yeah, over 2 billion.
2 billion rand?
Yeah. So I think what has probably driven investments, especially hospitality projects in KZN, is probably the landscape as well as the infrastructure investments that have been done over time. You look at Balito, it's a very relaxed atmosphere, lifestyle. We've got clean beaches. We have got the best water management infrastructure there in KZN, in Balito. So that has attracted a lot of investments. Then you also see that Club Med, wherever they go, they need to be close to the airport. This development is going to be 15 minutes away from the airport. And the operator Club Med itself, I think it's something that is huge, it's massive, it's something that is bankable. To your point, I think it's a paper that most funders would probably find it easier to back. So how we've probably managed to get it right, Dan, is the fact that we looked at different aspects of this project. So one, obviously, is the development aspect, which is where a lot of risk lies. So we, as ABSA, I think we pride ourselves in financing a lot of developments in KZN. So we managed to tick all the boxes in terms of the developer themselves, the development team, the contractor. Then we also looked at the operational stage of the resort. So that operational stage, I think that's where most funders struggle with, because it's not a proven cash flow from day one. So you are funding on the back of a management agreement. It can probably be a 15+15 management agreement, but it's still not guaranteed cash flows. In this instance, most operators will probably come in and say that there is a minimum EBITDA guarantee that they can give if they don't achieve a certain EBITDA. But still, you find that that is not enough to cover your commitments, your debt commitments. So we have looked at different structures in the instance of IDC, where we probably give moratoriums or interest-only structures, I think probably for the first 2 years. During the development stage, we make sure that we capitalize interest. So that's probably how we've supported, tourism assets in KZN and North Coast more so. Similarly for Radisson, we've just taken out IDC as senior lenders. So we've got different instruments also within ABSA. We have recently relaunched our Mayor's Finance product under ABSA Commercial Property Principal Investments. So now we've got another leg to it. So we've got both Mayor's as well as equity. So we've got also different instruments that we can use, to help developers and operators, to fund such assets. Thanks.
Can I have a business card? Do you have a business card?
Absolutely.
Thank
I've
you.
got plenty for everyone here.
Sounds useful. Yeah, thanks so much. And bravo to ABSA. Finally, we're going to get to Puja. Thank you for your patience so much. The IFC in Africa, what's your view, and how can you help developers with participation from the bank? Please.
Thank you, Daniel, and good afternoon, everyone. Tourism is critical to us as an organization, and especially in Africa. We started investing in 1960s, and our first investment was incidentally in Nairobi. Since then, we've committed over 800 million of our own capital and a total of over 1 billion including mobilizations across 140 plus projects and across 30 plus countries. And even now, at this stage, for us, our priority is to enable the private sector to accelerate job growth, and we believe that tourism is a critical sector to drive that. We are very much aligned with country and government priorities. We look at driving destination transformation across various stages. So whether there are new destinations which don't have any hotels whatsoever, or destinations which are relatively mature, we look to find white spaces across different types of hospitality assets, whether it's business hotels or resorts or hybrid hospitality or mixed-use developments or service departments even. Within the East and Sub-Saharan African context, considering safari tourism and nature-based tourism is considerable focus here. It is a considerable focus for us as well. Incidentally, last year we worked with the Zambian government on a document what we call private sector diagnostics, which identifies focus areas. And within Zambia, for example, we are looking at exploring nature-based tourism across their national parks, moving away from Lusaka, and in and around Victoria Falls as well. Another opportunity that they've identified is that, yes, they do have corporate demand thanks to their copper mining, but what they lack as compared to some of their other country peers in the region is meetings and conference oriented products, and so we are exploring that as well. Similarly, we are working with the Malawi government to identify nature-based tourism opportunities. We are another priority that for us is to drive sustainable tourism and somewhat relatively developed destinations. So for example, either in Egypt, where incidentally we committed our first sustainability linked loan last year with a company called Orascom for their property and hospitality portfolio. But even in other destinations such as Zanzibar, where we see there is a lot of development, our focus is to kind of shift the market towards thinking about sustainability. And last but not the least, a major focus for us is also helping to support the development of platforms. I think you've heard about Casada today. We provided funding to them at the height of the pandemic when they were setting up the fund to acquire assets and rebrand and reposition them. We also funded the Africa Conservation and Communities Tourism Fund, which was set up by the Third Way Partners in conjunction with the Nature Conservancy, again during the height of the pandemic, to provide loans to safari tourism operators in sub-Saharan Africa. This is a focus area for us as well. Thank you.
Thank you. Thank you very much. Guido, I'd like to just come back to you. Last question for you. Yeah, please. I've noticed that at your different hotels in the region, you have different structures in place with regards to brands and management companies, and you take on your own asset management, etc. Could you talk us through the different structures that you have? And if you were to invest in one of the hot markets that we list above, which structure would you think is best suited in terms of bankability?
Thanks. I don't think there is an answer that is a straight answer. Every opportunity has got its own strength. When we started, for example, in Botswana, in the city, it was without a brand. It was a white label. We then realized that the market was shifting, and we then converted to a Marriott. You run the Radisson Red in Joburg. That was the location is perfect for that kind of brand. The Red, it's a vibey brand. It works well in that precinct. I think fundamentally, where the property is will drive what is best for it. A brand and unbranded. We run very successfully our Chobe Marina Lodge in Chobe, which has got its own brand as Chobe, and we've been courted by the brands to brand that property, but we don't see any value in doing that, because the location is so unique that you don't need a brand to actually bring customers.
Okay.
So I think that's the working with brands. So we like to say we are managing the managers. So when we take on mainly franchise, we then work with the brands to growing. But it really depends in the locations.
Okay, that's interesting. Thank you. I think just to wrap up, Willie, let's ask you one last question. I think each of the banks have given a good statement of their exposure and their intent, and I can summarize at the end. But lastly, to you, Willie, do you mind speaking a bit about ESG and how you've noticed that this might help with the financial bankability of projects?
Yeah, thanks. I think ESG is no longer nice to have. It's now an absolute necessity, and we've heard it a few times this morning as well. And we can see on the projects that we are involved in the drive from our clients, from developers, from government, in terms of achieving certain ESG standards. When we talk about environmental, I think it's now part of probably most of the estimates that we do is to have a solar installation as the primary power supply for a project. We're talking about a lot of grey water harvesting, which is now part of the design right from day one. When we talk about social, a lot of focus on local partners, local improvement, getting communities involved where we have these projects. And governance, I think most of the projects we're involved in, there's a lot of scrutiny in following the right processes, procedures, to make sure that all of the governance boxes are ticked. So, in a nutshell, for us, we see it happening more and more, and it's now a case where it's not something new. It's now part of every project that we are involved in. And then, obviously, looking at materials, whether it's locally sourced or imported, using materials with certain green characteristics, and that will help with your Green Star ratings, whichever rating system you will use. So, very much at the forefront of every discussion we have on hospitality projects on the continent.
Great, thank you. Thank you very much. I think that's it. I'm just going to briefly summarize what I think I heard today. From our three lenders, IDC, IFC, and ABSA, all are interested in new hospitality projects, whether they're a commercial bank, a regional DFI, or a global DFI. IDC's preference is senior lending, not mezzanine, but they might look at equity in specific hot markets. IFC's focus is on senior lending and across the continent as a whole. ABSA have taken a big long position in KZN with their investment in what's it called? Club Med, as well as taking over the debt at our Radisson Blue Oceans. And let's see what they can do across the rest of the country. That would be interesting. Mr. Giacetti from RDC Properties has a portfolio in the region, some branded, some managed, some franchised, some unbranded. Depends on the location. Would be interested to grow further in the region, in hot markets, but it very much depends on the project on a case-by-case basis, and is very interested in getting more into the leisure industry, I understand. And lastly, Mr. Willie Schultz, depends where you are, that's how you pronounce it, depends where you are. He's from Turner & Townsend, and they have much experience in the project management and quantity surveying of hotel development. So thank you very much, guys. Thank you very much for joining today. It's been a privilege, and that's it from me. Thank you.